Hello traders, Jason here with SwingHigh.com. It is Wednesday, February 3rd, 2010, and this is your post-market analysis. We had some indecision today in the markets. The S&P down 0.5%, the Dow down 0.25%, the Nasdaq showing some strength, up a little over 0.5%, the Russells down 0.67%, and the financials dropped a full percent and then some, almost 1.1%. Gold pulled back a little bit today, down 0.4%, and the dollar popped 0.55% and above some key resistance on the daily chart here, above this 200-day moving average and above this 2340 area. So that's good to see for the dollar. Bad for the stocks though, because when the dollar goes up, stocks go down. So let's take a look here at the S&P intraday. Today was very choppy, very sideways, choppy, inside day in fact. This morning we gapped down, filled the gap almost to the penny, and then turned around, sold off, and basically the entire day we kept chopping through this 110 mark, which is a key resistance and support area, although if you looked at the action today, it doesn't look too much like that. We cut right through it in the beginning and held up a little bit on the way back down, making this low base, and then broke down through 110, put in a swing low, a lower swing high, and then a lower swing low, and then right here it looked like we were just about to make another lower swing high, but instead we broke out to the upside, and this huge candle was probably just a short squeeze. And then as you can see here, we made sort of a double top formation with 110 being the neckline. Broke through that, had a bear pullback, and then made a higher swing low, and then basically chopped sideways into the close. So we did finish below 110, but after hours it looks like we're moving higher above 110, so I'm actually more bullish than bearish right now. Right here on the daily chart, it looks like after this big sell-off we had here, and we put in a swing low, that's for sure, it looks like we could be putting in a lower swing high excuse me, a lower swing high right here. Not ready to call that yet because this was an inside day, as you can see. That looks a little weird. There you go. The entire trading range today was inside of yesterday's trading range, and the real body was a doji, which was also inside of yesterday's real body. So very indecisive here. Definitely a sideways move. I do expect us to move a little high a little higher from here and test this 111 area. And especially after hours right now, we have earnings coming out. Visa, for example, it looks like they're doing pretty well after hours. I'll show you that. Big spike, closed around 83.50 and right now is trading for 86. So based on earnings alone, I would call tomorrow a bullish day. I would expect us to move higher in the markets. But if I pull up the Bloomberg economic calendar here, we do have jobless claims coming out in the morning at 8:30. This is Thursday. And productivity costs also at 8:30, and the natural gas report at 10:30. But jobless claims can definitely throw a wrench in any rally from earnings that we might potentially have tomorrow. So watch that number closely, and we'll go from there. Make sure you check your trades. It's not smart to hold your trades through earnings because they can go in either direction against you, and very hard. If you don't know how to do that, I recommend going to Finviz, finviz.com, and then they have a very powerful screener where you can check your earnings date. You can see all stocks with earnings tomorrow, for example, and then they'll list them, or you can check your individual stock. That's not it. You can check individual stocks as well, and then they have the earnings down at the bottom. Thanks for being a part of SwingHigh.com. I'll talk to you tomorrow.